Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, happy 2025.
Well, indeed, yeah, it's a new year, a new year. I'm looking forward to seeing what happens this year. Now you're on the road. You're sort of in the Middle East somewhere, aren't you?
I'm in Dubai. We had
Yes.
some great meetings in at the One to One Dubai conference. Again, I'm not sure that conference would be good for early stage gold explorers, but for someone who's got a late stage development project, that would be a world class critical minerals producer. We had pretty significant interest, so I'll be in Dubai and in Abu Dhabi on Monday, and then there's the Future Minerals Forum conference in Riyadh, and so we're pretty full up on Tuesday and Wednesday. So you're very much looking forward to it. And again, this is a new part of the world found mining and keen to deploy money into the space. So looking forward to the next few days.
It's really interesting you say that because obviously I think we were looking at toying with going to VRIC, which is saying is obviously the week after next. Caters for a very different audience. I think you're starting to obviously attend conferences which are more appropriate for you. This kind of advanced development stage stuff and the reason I'm asking is because I get a lot of explorers come to say, "Hey, what do you think of like getting money out of the Middle East, Abu Dhabi, Saudi, Dubai for our gold project, our silver project, or whatever exploration project? Because the money's dried up back home. It seems."
Yeah, I don't think, again, they're just getting into the mining space. So then expecting somebody just getting into the space to understand exploration risk and geology and so on and so forth, I mean, from what I've seen and based on the feedback of the people who attended one to one, if you are in production or have a near term path to getting in production, those are the kind of things they're interested in. And there are smaller scale check writers here, but this is a big money part of the world, and so a lot of these guys don't get out of bed for $50 million, $50 and up, right? So you need a certain scale project, for them to be interested in it. So fortunately, we're in good shape on both those fronts.
Right, and you're obviously this isn't about chasing small equity check writers. This is you're looking for meaningful partners, strategic
Yeah.
or otherwise. Okay, interesting. Interesting. Okay. Well, look, today I do want to talk to you about that, and maybe we can talk about that either offline or in another next week's show, because I know
Yep.
you literally just landed. You must be shattered. Um, look, we're going to talk about 2025 forecast for 2025 outlook, some of the drivers for that. But why don't we sort of do our usual for now? So we'll save that for the end. Let's kind of have a quick run through of where nickel is today. So what do we need to know?
Sure. So last time we talked was the week before Christmas, and so not surprising, market was relatively quiet. We have bounced off the bottom. We had traded down to $15,000 a ton, but back up to 15.6 with a nice little move this week. One thing is in terms of the net short position in the market. Is probably about 2/3 the way back to the record level that we hit last January. So again, why that's important is, again, if you want prices to go lower, you need people to go short the market, generally. So when you see potential turnaround, is you want to see that net short position get to a very sort of big level. And those are the kind of things that can set up for short squeeze, which again, we saw last year in the first part of the year. And we saw obviously in 2022, when we broke the LME. And so, I think given the lack of fuel to push lower, and now that we're in the seasonal mine reduction in Philippines output, again, that sets the stage for, I think, a pop up higher here. The other piece that was nice and supportive is that, since Christmas time, while prices have been sideways, we have seen stainless inventories also start to drop, and then the nickel exchange inventories, have stopped growing, and they've been sort of steadily ticking upward most of the year. So again, I'm pretty bullish on the outlook for the first quarter, and we'll talk about some of the specifics in a few slides. So I think we'll be definitely back on towards 20,000 by year end, and even maybe by the end of the first quarter. That's that's what happened last year, but at a minimum, I think we get to at least 18,000. And again, part of the reason just a little less bullish in terms of the near term. There's a lot of nervousness in Asia around the impact on Asian economies with the Trump tariffs. So We'll need to sort of, see the inauguration, see what gets announced in the next 4 and 6 weeks. And again, even if it's not great, just the fact that it's been announced, people understand what it is. That'll cause them to move forward. So
yeah, is it posturing or is it real? We wait with bated breath. I mean, the other bit, before we kind of get into company news, obviously the other bit of big news out of Indonesia is around quotas.
yeah,
What's that going to do for us?
Yeah, so we'll talk about that in the forecast in some detail. But literally on Friday, there had been a few other stories floated around, but the government came back and said they're going to be issuing quotas for around 200 million tons. It's in these kind of situations, it's good to keep it a little bit vague to give yourself flexibility, so you don't get cornered into a certain number by traders. But that's basically about a 10% drop from last year, and to maintain the kind of supply forecast that a lot of analysts have, you would have needed to see that number go up. So it's very, very bullish. I think you'll see a little bit of price action, maybe a little short covering, but I think people will want to see, some demonstrated constraints on, or, it'll be a bit of a show me phase. But if we go through the first 2 or 3 months of the year, and see, mine production, it's relatively flat to down and on track for a 200 million type number. That's what's really going to underpin the move higher back up to the 20,000 level.
Yeah, as I say, I was speaking to Andy Home, the senior metals correspondent at Reuters, I think on Wednesday, and he's saying what Indonesia is doing is very, very interesting, and trying to capture more of the value chain.
Yeah.
He expects good things now, and I think we're actually talking about whether they'll be able to try and do the same thing with tin. We shall see.
There we go.
Right. I think that's a little bit more complicated.
Yes.
Yeah. But all good news. Well, let's have a little bit of company news. Western Mining Group.
Yeah, so they're the Mulga tank. They're the big ultramafic discovery in WA. They've got a deal in place to buy back a royalty. Metals company, which is the nodule miners in the ocean. There's they highlighted a big U.S. government report. They're able to get some funding and support for nodule processing in the U.S. So again, good clear sign again that the U.S. is focused on getting their hands on as much critical minerals as possible. And again, generally it was pretty quiet. It was still a pretty busy time for us since we talked the week before Christmas. We've actually had 4 things out during that 3-week period. So we put out our Reed resource right before Christmas time, and then a summary of our 2024 exploration program. We signed a definitive agreement to acquire 32,000 acres of surface rights, which we need to build the project. $4 million flow-through financing to help finish off the 7 resources that we want to publish by mid-year this year, and then that was with 2 funds who've been supportive of us all the way along. So it was a pretty simple, straightforward deal. And then we announced that we extended our Oramet loan out to mid-March, just because it's taking a little longer than expected to get some other strategic finishing initiatives over the line, which we expect to get done in that time period. Reed, we've talked about, again, it's got a much bigger footprint than Crawford, and an initial resource, that was much larger than the initial Crawford resource, 1.6 billion tons with 3.5 million tons of nickel in it. When you add in the exploration target potential, of basically 1 to 2 billion tons, you're looking at in all buckets there of somewhere between 5 and 8 million tons, with more than a third of the target to be tested. So very, very happy with where that came out. And again, economics wise, we think several of these deposits could be better than Crawford. This one has about a third to half less overburden than we have at Crawford. It's a much wider deposit, and so across the overall potential, you're looking at strip ratios 1 or lower, and it does have a little more chromium in it too, which is good. Again, bottom line is the whole Timmins Nickel District program was 119,000 meters, and we actually drilled 14 separate targets. So when we talk about a district with a bunch of potential deposits, we really do have that kind of setup here in the Timmins area.
Right. Now, obviously, talking to you over the year 2024, it's kind of clear that you're kind of moving into this in industrial phase, in the sense that you're attracting strategic partners, industry partners who know a little bit about, maybe the market drivers and can interpret the data differently, say from the markets. And by that, I mean, the equities markets. Is this sort of your intention for 2025 in terms of positioning Reed in a way that you can get this thing financed to demonstrate the ability for the other projects to get financed? Because at the moment, it's that you're still dealing with that kind of, I guess, burden of proof. Is this type of project fundable?
Yeah, no, and that's the key piece here is yeah, no, with Crawford, right? Well, the key here is permits and financing package in place by next fall so that we can make a construction decision before year end. And that's the piece here. Some people sort of said, well, why did you spend money exploring all these other properties? One, Agnico gave us that money and said, we'd like you to do that. But number two is, and this is the opportunity here, is once Crawford gets positioned and ready to go, then all of a sudden, you have a whole pipeline of multiple opportunities, that are reasonably well advanced, to be able to put into the same machine in terms of PEA feasibility study into production in a market where there's very, very few nickel projects out there. So, we think it's going to, in terms of, we'll have a big re-rate as Crawford, gets to a construction decision, but then we get that re-rate multiplier by the fact that we've got all these other other projects staged and ready to go right behind it.
I guess it's a different sort of game, isn't it? Amount of companies come on here and they talk about their 8-year, 9-year, 10-year, 12-year life of mine. This is more your multi-decade, multi-generational stuff where I guess the infrastructure is front-ended in terms of the cost, but the people funding that, not you, will be looking to amortize that over the course of 30, 40, 50 years. That's the game you're playing.
Oh, and even part of it is we're just leveraging the fact that we happen to be fortunately in an area that already has a big amount of infrastructure, right? So unlike another mining project in a remote area where, okay, you're going to build the mine, but you have to build all the infrastructure to build that mine. Each of these projects, there's still some infrastructure associated with it. In case of Crawford, we have to move some out of the way. But a lot of it it's very short connections to rail lines, to power lines, to highways, to communities who can then drive to work every day. And so, again, that's a big part of the lever here in this re-rate is you have a much less capital intense path to be able to get to a lot of nickel versus pretty much any place else in the world. So
right, okay. Well, I'm sure we'd love to have you on and maybe talk just purely about what you think, how you think last year went, and obviously plans for this year. But we'll do that separately. Let's get, first of all, as an annual event, which is, let's get your thoughts on how 2025 plays out and why. You've got a couple of slides which will pop up on the screen now. There we go.
Yeah. So the big headline for this year, this is, Indonesia started to flex its muscle last year, but this is where they're meaningfully going to do it. They've been butted heads with the Chinese, who would just like to produce as much as possible. But the Indonesians are trying to be good stewards of the resource. And I'll show you why it's important to Indonesia. And it would be really stupid if they did anything else but manage supply in a way that took prices up, probably about a third higher than where they are today. Yeah, so 2024, we came up a little bit short. We had some more destocking in the EV chain. The stainless, once that saw nickel prices roll over a little bit, then you saw some destocking in the stainless chain. In fourth quarter, we did start to see a little bit of recovery, but the whole impact of Trump talking about all these tariffs he's going to put on still, sort of was a bit of a damper on demand in the fourth quarter. Even with that, we're still looking at 4+% growth for the year, which again is better than most base metals that are out there. The year, yes, we did see a buildup in inventories, through the year. But the key piece here is that we now have 3 years. Most analysts over the last 3 years have 600,000 tons of reported surpluses, but reported stocks are only up less than 100,000 tons. If you toss in some off-worn inventories, that's maybe, gets you to about 125 to 150. You just those numbers over the long run need to be the same number. And so, I gave them the benefit of the doubt because, there was talk of we just need more class one refining capacity, and there's some, inventories that need to work through. If that happens, I didn't agree with that, but okay, I'll give you the benefit of the doubt now. But the class one capacity has been built. They can deliver as much as they want to the LME, and we're still up only this amount. So again, this is this first fill inventory that they've been missing, and again, way overstating where in a negative way where the state of the nickel market is going forward. Key piece again in the we go looked at last year, you'd have seen a huge amount of negative news on nickel, but the reality is we're nearly double where we were in the bottom in 2016. That's been underpinned by the increases as ore grades have dropped off, NPI production costs, and marginal Western producers have gone up. Again, EVs were all over last year, was all hype. There was no real sales growth. And yet this year we're up 25%. And you can see that, the other markets, just again, the other storyline is, it's all hybrids. No one's actually buying a full battery electric. But if you look at the battery electric numbers there, a lot of markets, doing really well. I really want to emphasize that if there's one thing to take away from this presentation today, this is the full, this is 2025 is year one of the ONEC era. Indonesia is now, 2/3 of the nickel market. They've, squeezed out lots of supply globally. They're in the driver's seat to produce as much or as less nickel, that they want to do. Again, they were over 100% of supply growth because a bunch of people cut the limits that they did. So they, as I said, they started flexing their muscle in 2024. And then we've talked about the fact they had to pull in 90 million tons of ore from the Philippines to keep their plants, partly full. And they really are facing declines in saprolite ore grades that go into NPI. And the challenge with the weak cobalt prices for the HPAL plants that they're building, cobalt is a pretty meaningful part of the overall economics. And so that big decline in cobalt prices are really having an impact. And again, the other key point I would make is, nickel, cobalt, and a bunch of other minerals is not about the energy transition. It's not about the EV transition. It's a national security issue. Western governments want China out of the supply chain. And so we've seen this past year limits on China and antimony, gallium, germanium, graphite. They're going to keep flexing that going forward. You are going to see a bunch more metals demand as reshoring happens back into Western economies, again, to pull those supply chains out of China. And again, we've had very few new discoveries outside Timmins. So one thing I always do is rate myself. This year I failed. I only got a 1.5 out of 4. Again, I was expecting a bigger restock. We got a little bit going in the first part of last year, but then the prices really popped up. And the fact that we saw lithium prices continue to decline really took a lot of steam out of the battery market. Again, got the supply story right in terms of Indonesia. And again, highlighting the fact that the grade issues were there and quotas were going to emerge was a check on both of those. Because we didn't see the demand, we didn't get into a deficit. We still had a supply. I called for prices when we were at 15,000 last year to get up to 20 by year end. Now we got to 21 by April, which was way too much too soon. And unfortunately, we lost the momentum in terms of demand growth and fell back to 15 by next year. So in terms of, again, this key issue around Indonesia growth. So this is a chart we've had in a presentation now for 5 or 6 years. And this number's steadily been increasing. And again, Indonesia on its own is now much larger than OPEC was at its peak. And if you toss in the Philippines, you're almost at 3/4 of mine supply. On the chart on the right here, you can see this orange line here. This is revenue contribution of nickel and stainless steel to Indonesia's total exports. During this time frame, Indonesia's gone from having trade deficits, current account deficits, to having trade surpluses, current account surpluses, until nickel prices rolled over in the last 18 months. And now they've now gone back out to a current account deficit. Nickel and stainless steel is important for the overall Indonesian economy. And so if you have a scarce resource that you can manage the supply of and have the price be 30% or 40% higher than it is now, and make that much more revenue and change your overall current account for the country, it would be madness not to do it. And so I think you will see Indonesians move price. And why I think 20 to 21,000 is the level is if you look around the world, other than our project and maybe a couple of other projects, there's very few new projects that can come online at those price levels of any scale. And a lot of the production that got shut down in the past 18 months would again, really need prices north of $22,000 a ton before restarting. And so, this is, they are in a position now, where they can help drive their economy by managing nickel supply. And so when they banned ore, 10 years ago, this would be a dream objective, and they've got it. So, I think it'll be foolish for them to do anything else. But in terms of, sort of starting to flex their muscle, I would just point out here this, what we saw through the summer. So the dark green bar is mined. The pale green is finished nickel production. And you can see they hammered down mine production through the last 4 months of the year. So we saw mine supply effectively level out. And that's when you saw the big surge in Indonesian ore imports from the Philippines during that time to try and keep their plants full. This yellow line is the price of ore in Indonesia. That's what the Indonesian miners get paid. And again, to Indonesia, this line is almost more important than the LME nickel price, because for a lot of businesses who run mines in Indonesia, this is what they get paid on. So they were very happy. I talked to some trading companies who've been through Indonesia in late November, early December, and they were happier than all get out that they were getting $50 a ton versus $30 a ton at the end of the year. So that number ended up at $60 or $70 a ton off the back of higher overall LME nickel prices. Again, it's a win-win for the Indonesian economy. Class 1, Class 2 nonsense. There's been lots of capacity built, lots of Class 1 nickel metal production now in China and Indonesia. That should finally get rid of this nonsense. And again, everything's just going to trade to the marginal cost difference to process those raw materials, as it does in every other commodity that China is involved in over the last couple of decades. In terms of prices, again, would I like prices to be higher? Yes, but am I disappointed that we're leveling out at these kinds of levels as opposed to sub $8,000 a ton in 2016? And so this is a reflection of the fact that ore grades are declining, costs are increasing, and so that's become the new floor. And as ore grades continue to decline in Indonesia, that floor price should continue to grind higher going forward. LME nickel prices in Canadian dollars, with the Canadian dollar at 69 cents. Other than a few years over the past few years and a few years in the mid 2000s, nickel prices in Canadian dollar terms, which is what actually matters to me as a future Canadian nickel producer, is as good as it's ever been, except for some very brief periods of time. And so again, not unhappy, and as I expect to see the Indonesians push nickel prices back up into the low $20,000 ton range, we should see big improvement here. These are the exchange stocks. The story I said, this is what's physically, if you've got a 600,000 ton deficit and you've only seen a 100,000 ton increase, that means someone is sitting on 500,000 tons of inventory that they've been willing to finance for several years for whatever reason. Makes no sense. And the analysts need to go back and update their sums so that they reflect the actual physical change in stocks globally. So we'll see how much of that happens over the next year. Demand on track, as I said, 5 million we've been saying since 2019 or 2020. If we stay at the upper end of growth range, again, even with the slowdown this year, we're still at nearly 4%, still nearly 9% a year for the first 4 years. It's far in excess of other base metals and far in excess of most people's forecasts. The battery story, again, I'll leave the data there, but just reinforcing in my opening comments. Key thing is there's just not much else supply outside of Indonesia. That's what people need to focus on. These are slides I've used multiple times, so I won't go into any detail, but just for reference, all the laterites have been around since the 1980s. We haven't made a new one, so we've got basically an almost finite laterite resource that we're living off of. Sulfides, high grades are great, but the two discoveries this decade were 250,000 tons, and Centaurus, will maybe get to 1% and just over 1 million tons, and that's it. The last 1 million ton plus at over 1% was Voisey's Bay. 30 years ago. Big ultramafics are the only large scale resource that's been unlocked in the last 10 years. And we think what we have in the Timmins district will play a key role in that. We're very happy with the drilling program. As I said, we pumped out 114,000 meters of drilling. We've hit 14 separate targets. We've published 2 additional resources already. We've basically copy and pasted the flow sheet we developed for Crawford and have tested it on 2 of those targets. We think there's another half a dozen potential Crawfords at least in this camp, and that will end up with a nickel endowment bigger than Sudbury. And one of the only large scale resources outside of Indonesia that that could deliver stuff to market. So nickel demand 8 to 10%. The reason I'm not at a double-digit growth rate, I think we may still get there. I just think the Trump overhang in terms of impact of the potential tariffs on Asian growth is going to make people a little hesitant through the first part of the year. But again, we'll still see at least 8 to 10%. Most of the EV analysts have nickel demand, in the 20 to 25% growth range next year, which will be amazing. Indonesia is going to still be 100% of supply growth. One of the things, again, I don't think people are really factoring in, there's a lot of announced closures last year. But by the time you announce the closure, you actually close the mine, and then the remaining production works its way through their supply chain to the customer. That gets extended. So a lot of these cuts, we're still going to see impacts on available supply through the remainder of this year. So we'll need Indonesia to step up to be, well more than 100% of supply growth. I think you'll only see it increase 2 to 3%. They'll want to keep a gap versus the demand to basically push the market into deficit, and the Indonesians will manage supply growth, to keep prices back into that $20,000 a ton range. That's the risk is that we will likely see something rise pretty sharply, maybe get all the way back up to that level by the end of Q1 because of the Philippine quarterly shutdown. And again, I think the Chinese are lying about their ore stockpiles in China, and so that's going to squeeze things higher here in the next couple of months. So now I will stop.
Okay. Thank you for that. Obviously, we'll continue to talk about it throughout the year, but just going back to your company, your shareholders, and also referencing what I talked about earlier, where I think it's clear to me last year, advanced developers and producers were getting rewarded, okay, because people wanted to show me the money, I guess, in crude terms. The explorers and any other kind of model which was far away from revenue of any description were not getting the love. I want to ask, how do industry partners that you've got and industry partners or potential partners or investors from industry look at what you've got? What do they think is important for you to deliver this year? I know we're going to end up in an FID at the end of the year, but what's important for you to just demonstrate to them? And therefore, what should shareholders, maybe not the institutional kind, what should shareholders look to as a step change moment? If you get this right, this is where the value gets delivered.
Yeah.
What do you think?
So there's two main fundamental drivers. Obviously, the nickel price, right? We're in a place right now where most of the development stories, aren't particularly attractive economically, but we've made the case why I think nickel prices are going back up to 20,000. In terms of the project itself, we get into this nice self-reinforcing positive cycle going forward now. So, we spent the last year and spent a lot of money, advancing permitting, right? So we're down to the final stage in the federal process. We spent money on doing the front end engineering design, so we have the engineering complete to be able to make long lead orders. And so, what those industry partners do, the more you de-risk the story and the closer you get to a final investment decision, the more attractive, more interested they get, and the more interested they get, is that's the kind of piece that again is that self-reinforcing loop. And so, as an example, we have a nickel plant and a steel and alloy plant that we're going to build in the last 60 days, we've gotten, significantly increased interest from a number of the major stainless and alloy producers in North America and globally, because with the permits that close to coming done, it's becoming more real, right? So, as the project gets to be, quote, more real, then those industry players like, okay, I got to make a decision. I got to decide if I'm going to get in here. And so, as we've seen an uptick in activity through the fourth quarter, and as we go through the year, and as those permitting milestones happen, we should be in good shape. So in terms of specific catalysts, you'll see the market stories come by. You will see steel partners, mining project partners. Those announcements will come through, through the first half of the year. And then when we get that full financing package together and get those key elements, so we've announced letter of intents from EDC and other financing institutions. Once we get to, basically a funding agreement with those groups later this year, those kinds of announcements, again, will, just the puzzle pieces will all start to fit. And again, just, make the project real, which just, it increases the attraction for industry guys.
Yeah. And if you'll come on and we can talk about Canada Nickel proper next time around. I'm just conscious this is probably the wrong show for that. But a little bit more insight into when you talk about like U.S. stainless steel guys. Obviously, the bulk of with your economics, you're fitting into the stainless steel market. We talk a lot about the EV market and whether it's hybrid or full blown EVs. As drivers and catalysts, but the reality is right now the bulk of the market is stainless steel. You're directing towards stainless steel. So tell us a little about what U.S. stainless steel companies want. When you say they can see you with the kind of the permits, etc., at least in process, what are they looking from you? This isn't an equity thing. Is this an offtake thing? Is this a cash into what sort of engagement would they be looking for?
Basically partnership, offtake, and so forth. There's players, who want some new capacity, right? To move into a market. Other players have finishing capacity, but would like, we'll produce a semi-finished product. They would love to be able to use their idle finishing capacity to take our semi-finished product and do it. And again, in stainless and alloy steels, we're exposed to the aerospace industry, the automotive industry, and some, and again, all of those industries in the U.S. are going to continue to grow and get reinforced with the orange-haired guy in the office for the next 4 years.
And this is about certain. This isn't just like just having a poke around and a prod around with what's going on out there. This is because of the uncertainty of Indonesia and the power of Indonesia and even what's going on with China and all the tariffs and all that kind of good stuff. This is about certainty of supply and wanting to understand where their product can come from. As you say, maybe to fill idle plants or whatever, but is it going to therefore become less about price and more about that certainty that companies like you can deliver?
They're talking to us because we're one of the new sources of supply that are inside the fortress walls.
Okay.
Right. And those fortress walls are going to get, bigger and sharper and pointier as we go forward. And so life will be a lot easier and more predictable for them if they're dealing with companies, dealing with sources of supply that are firmly inside those fortress walls.
It's interesting. I don't know if you saw that, and probably no reason why you should, but it's because it's to do with lithium and LFP batteries. The DoD, U.S. Department of Defense, basically, I think they have now designated CATL, one of the kind of big Chinese LFP battery manufacturers, as a military company, and therefore it kind of slightly expands this, the fact that it's Department of Defense saying that and not some kind of commercial entity. It's kind of interesting in terms of the remit of what critical minerals fall under, I think, at the moment, and the extent of, how far the US is going to go to protect its own.
Yeah, this is a national security issue, and they are going to, and there was another government program. U.S Exim Bank announced that there's a whole new sort of set of funding and so forth, just I think last week. and they're going to continue to throw money to try and deregulate stuff, do whatever's possible until they see China meaningfully getting, get out of a bunch of these critical mineral supply chains, and they can actually produce these things within friendly countries.
Exciting times. I think
Very
there are some
exciting.
fun conversations this year. Really do. Right, okay. It's late. You've just landed. You've got to get some sleep. You've got a whole bunch of meetings with some big money over there. So good luck to you. And when you get back and you've rested, let's talk Canada nickel.
Sounds great. Thanks, Matt.